In today's episode of the Brisbane Property Podcast, we are going to cover Brisbane's latest data in our market update episode. So all of the information about what's been happening throughout November 2024. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hello everyone and welcome to another episode of the Brisbane Property Podcast. Lead up to Christmas and our last market update for the year.
That's right. We always like to inform our listeners on what's happening in the Brisbane property market, and there's no better time to do that than just before Christmas. It's going to help spark those conversations around the barbecues that happen over the festive season. We know property is always on everybody's list of what to discuss. So here's some information that you might like to include in those family discussions.
Yeah, it's usually something that, as you said, it's always discussed around barbecues, and Christmas is a great time to be talking property. I'm sure we probably will do the same. So November, I mean, look, we've probably seen Brisbane continue to perform really, really well. When you look at on a national stage, Brisbane has really competed very well and has performed very well.
Look, it absolutely has. It's remained one of the standout capital city performers when we compare Brisbane against all other capital city markets. We still remain in the top 3 capital city markets across all of the country. Brisbane is still in a positive growth state month on month, unlike other capital city markets, which have now moved into negative growth territory. And of course, as we've pointed out previously, a lot of that has to do with the fact that we've got local drivers of supply and demand that are causing our market to continue to grow, whilst at the same time they're, causing other markets to soften.
We've also seen not just that demand side of things and limited supply, but we've also got the employment growth and really strong economic prosperity. I mean, Brisbane we've talked about this on a few podcasts before, where we talk about the underlying factors for Brisbane and the prices on property prices, the pressure, I should say, on property prices. Got all that out eventually. I think it's just there's a lot of pressure there because of the underlying factors.
That's right. And I think that, we can't underestimate the impact that strong employment and a strong local economy has on property markets and driving the demand for property throughout Southeast Queensland as a whole. And of course, we don't see that changing any time in the foreseeable future. So really strong demand indicators at a time where supply is obviously quite tight.
Now, I know people do always talk about the property market in general over everywhere. I mean, and when you look at it compared to, say, Brisbane compared to Sydney and Melbourne, the other big capitals, Brisbane recorded 0.6 increase in the month, bringing the quarterly growth to 1.8 and annual growth to a very impressive 12.1%. When you look at then Melbourne, dwelling values fell 0.4% and Sydney experienced a decline of 0.2%.
Yes, and this is where national news headlines at the moment are usually dominated by what's happening in the 2 largest markets, being Sydney and Melbourne. And the national news headlines, I've seen many of them. They're quite alarming yet again that, prices are falling. That's not the case around all of the country. And in fact, Brisbane, Adelaide, Perth, they do continue to outperform, and we do still see month-on-month price growth. I will say the momentum of that price growth is easing. So the rate of growth month on month is slowing down, but the growth is still positive month on month. So that is an indication that if you are buying today versus 2 months from now, it's likely you're having to buy or pay more 2 months from now because the market is still moving up. It's just the rate of growth is slowing.
One thing I like when I look at this information, I know I've said this every time we do a market update, that Melinda does complete this blog and it's also on our website. So if you want to jump over and have a look at it on the website and read through some of this information. And this one is quite interesting. When you look at Brisbane in second place is the most expensive capital city, but then when you break it down and we talk about Brisbane in bang for your buck, we always say that, you get really good bang for your buck. You get what you get, the size of the house, the size of the block of land, whether it's the views, location-wise, distance to the CBD. But the affordability side of it, when you break it down into price per square metre,
Yeah, so there's some really interesting data that's come out by PropTrack over the last month where it rates the median value by a square meter rate per capital city. And it actually confirms what we've been stating for several months in that Brisbane is actually more affordable than other capital city markets when you consider what you get for your money. So in this instance, Brisbane is actually more affordable when we compare the rate per square metre or the median value per square metre. We remain more affordable than Melbourne and, of course, more affordable than Sydney. So Melbourne does retain its position as the second most expensive capital city market when we look at the value or the median value on a square metre basis. So you definitely have to pay more at a median value level for a property here in Brisbane, but what you get for that dollar value is more land, more house. And so this is where it's really important to break down the data to understand what it is telling you. And we've got this PropTrack information now confirming what we've been saying for many months in terms of, the value per square metre or what your dollar buys bang for buck effectively.
And this is based on the median?
That's right, median value per square metre.
So if you look at Sydney, for example, price per square metre, 2,450.
Yep.
Melbourne, 1,600. Brisbane, 1,480. Adelaide, 1,430. Perth, 1,400. Hobart, 920. Darwin, 650. And ACT, 1,360.
Yeah, that's right. So that gives you an indication of the amount that you need to spend at a median value level for per square metre of property that you buy. So if we're looking at houses, Sydney remains the most expensive capital city market and well ahead of all other capital city markets, I might add. But then Melbourne actually is in second place. So it says that even though the median value in Melbourne is now less than the median value in Brisbane, when you spend your money in Melbourne, you're getting a much smaller block of land and a much smaller property compared to the same price here in Brisbane. And that's just important for people to understand because data doesn't always tell the full story in terms of affordability and, what your dollar will buy.
Tell you what, looking at that, the price to build a property compared to buying established properties, I know the square meterage that people are talking about at the moment in construction, and it's well above those numbers that we've just read out on that chart there that we've looked at.
Yeah, that's right. So that's also something to consider. I know we talk about the cost to build units at the moment and the cost to developers to bring a 2-bedroom unit to the market versus the established cost to buy into the market already. And there's quite a disparity between those prices as well. And this is where value buying is often overlooked by some buyers, but this is obviously something that we as property investment advisors and also buyers agents can identify where opportunity exists.
Cool. So let's jump into some sales and listing trends. So sales volumes in Brisbane grew by 6.1% over the past year.
Yeah, and that's just an indication of ongoing strong buyer demand. So we still have that higher volume of transactions taking place month on month compared to 12 months ago. And it's an indication of the fact that the buyer depth is still there in Brisbane. There's plenty of active buyers in the market that are willing to transact, and that's coming through in higher sales volumes.
I thought the auction rates were interesting. When we looked at the auction rates and the clearance rates softened slightly to 58.2% in November. Number of registered bidders per auction averaged at 2.5, and that's a slight decrease compared to October's 2.7.
Yeah, that's right. So again, a lot of buyers do leave the market around mid-November. They start to think about Christmas. We see people filling the shopping centres on weekends. We see the volume of buyers out and about on Saturday inspections start to decline. And this is also reflected in those auction registered bidder rates and clearance rates as well. Anecdotally, I'll also add that we've attended a number of auctions in the last month where there's been plenty of registered bidders and plenty of active bidding, but properties have not actually sold because they haven't met the vendor's expectation. And I know in the past we've talked a lot about the fact that for a property to sell, not only do you need to pay a price as a buyer, but you also need to ensure that that price is going to be at a level that the seller is willing to accept. And we're starting to see those seller expectations edge ahead of the market in some instances. That's also causing days on market to push out a little longer because the sellers are looking for a higher price and buyers are just not prepared to pay that at the moment. So there's a bit of a standoff, and it is causing some properties to pass in, and that's reflected in that clearance rate, which has edged lower between October and November.
A little bit of a mixed bag here. And don't forget, we're covering all of Brisbane here. Okay, so we've been to some auctions as well where they've been, we went to one a couple of a week or so ago. There was 11 registered, I think it was. So, and I think there was probably 5 or 6 active bidders. So location specific.
Yeah.
And then obviously, as Melinda mentioned, vendors' expectations can be a little bit higher as well. The other thing that people to be aware of as well is coming into that late part of November, usually when you buy a property, generally it's pretty standard that it's a 30-day settlement. That puts you right in the middle of Christmas. Okay, so some people are probably thinking, oh, I'm not sure I really want to buy it that time of year. Maybe throw some conditions on it and try and negotiate outside of auction conditions for different settlement times and things like that. Generally, vendors are pretty flexible on things like that, where they might get flexible on conditions for settlement.
Yeah, we've also seen some vendors, though, put in shorter settlement periods so that they can be settled prior to Christmas. So, of course, it's important that buyers understand what's going to appeal to vendors if it is a private treaty sale. Of course, with auction, quite often the vendor sets the terms, but you can negotiate those terms with a sales agent if they don't suit you as a buyer, but that needs to be negotiated upfront before you bid. So that's obviously a tip for those out there in the market that are considering bidding at auction. If you're not wanting to settle when the settlement timeframe is stipulated in the contract of sale or on the date that the agent shares with you, you can ask if an alternative settlement option is available, and that can be agreed upfront in writing prior to auction day. So just something to keep in mind, and something that we as professional buyers agents often do on behalf of our clients when vendors are, open to that negotiation.
So the longer term listing trend in Brisbane, obviously that's highlighted the ongoing supply constraint.
Yeah.
And Brisbane's still well below our 5-year average.
Yeah, so a lot of people just in the last month or so have said, oh, there's a lot of extra, new choices, new properties being listed. And in fact, that's now reflected in the data in terms of new listings. We actually saw an uptick month on month of 6.5%. 1.2%, excuse me, that I want to get these facts right. We saw an uptick in new listings of 1.2% in November compared to October. And year on year, that demonstrated 6.5% more new listings. That's these new properties advertised for sale. Total listings rose month on month by 8.5%. So yes, there's more property in the market available for sale. A smaller portion of those properties are the newer listings, and a larger portion are those older listings. They are homes that have been on the market for more than 30 days. So the total volume of properties available for sale has increased slightly month on month, but a smaller portion of those are due to new properties that are available. So it's something that buyers can become very frustrated at simply because it's the new stock that is most appealing. That said, I believe there's plenty of opportunity in some of the older stock that might have been sitting there, especially if, for example, it hasn't sold purely because vendor expectations were ahead of the market. We've certainly seen some strong buying opportunities for our clients for properties that may have been on the market for a little while, but the vendor's expectations weren't quite at the market level previously, but they have actually adjusted. And in the lead up to Christmas, they became more motivated to meet the market. So that's something that often happens at this time of the year as well. And that's a reflection of the fact that there has been more old stock, but there's opportunity in those older listings as well.
The rental market, obviously very, very, very tight. There's no change there. I think it sounds like a broken record. Do you want to talk about the rental market? Vacancy rates remain really tight, 1%. And rents in both houses and units grew by 3.6 annually in November.
Yeah, so that's actually marginally slower than the previous month. So the rate at which rents are increasing is slowing down, which is great news for tenants out there in the market. A lot of that is due to the fact that there's the new tenancy laws in place. We can't allow rental bidding to take place. So the advertised price is the price that you will pay to rent a property. But also it is due to affordability constraints as well. A lot of people just can't afford to pay more in rent. So a lot of areas have been capped in terms of what can be charged to a tenant. And of course, it's not driven by greedy landlords. It is driven by supply and demand. So even though vacancies remain tight, we have seen a little bit less pressure on those properties because perhaps interstate migration and overseas migration has slowed down a little bit. So there's less pressure on the rental market right now, and that's causing a slower rate of price growth in terms of rents.
And I think that we've talked about this again. We'll see that change, I think, on households, how people live, increasing the number of people that are going to live in a property just to make it more affordable to get those properties as well.
Yeah, and I think that rental affordability has declined significantly over the past 4 years, and we can't underestimate the pressure that some tenants are under when it comes to meeting their weekly rent repayments. When we have a look at some of the capital city markets and we determine how affordable they actually are for people who are the tenants in the market, the share of income that people spend on rents within each capital city market does show that Brisbane, along with Melbourne, Adelaide, and Hobart, have moderately unaffordable rents, whilst Sydney and Perth are now considered unaffordable. So this trend actually underscores widespread pressure that exists on renters throughout Australia. Now, the information that I've just shared with you is based on the National RAI Summary for Metropolitan Areas. It's a study that was actually conducted in June 2024 by SGS Economics and Planning. So these are real figures based on affordability across the nation. The least affordable areas for people to rent are currently Greater Sydney and Greater Perth, and most other capital city markets, that's Greater Melbourne, Greater Brisbane, Greater Adelaide, and Greater Hobart are considered moderately unaffordable, with the ACT in Canberra actually considered acceptable rents in terms of affordability. So that gives you a snapshot view in terms of what's happening around the country in terms of rental affordability.
So if we jump into dwelling values, Greater Brisbane dwelling values, so we've seen them that rose by 0.6% in November, bringing the quarterly growth to 1.8%, and Brisbane's annual growth 12.1%.
Yeah, so when we look at the national average, the national average grew by 0.1% throughout November. As we previously pointed out, we saw Sydney and Melbourne markets decline slightly month on month. Quarterly, we've also seen negative growth in the Sydney and Melbourne markets now, whereas Brisbane retains positive growth, and at a national level, growth is still sitting in slightly positive territory at 0.5%. So it is interesting to see how the larger capital city markets are trending compared to the national average, but also how Brisbane is comparing to those trends as well. So Brisbane definitely ahead of the national average, and we are seeing a lot of that local diversification with the big markets going backwards, and Brisbane, Adelaide, and Perth continuing to retain the top 3 seats in terms of growth month on month.
And the median value fee for dwellings in Brisbane, $886,540.
Of course, and that is the second most expensive capital city market by median dwelling value. So again, it's important to note that it doesn't necessarily prove that affordability is worse here when we look at the dollar value of what you get. As we pointed out, Brisbane's not as expensive on a square metre basis as Melbourne and Sydney, but it is when we're looking at actual cost to buy.
The affordability side of it, again, we'll touch on that when we look at what segments of the market are actually performing higher than the others as well.
Yeah, and this has not changed. It's a theme that has existed throughout the whole of 2024, in that the more affordable segment of the market continues to outperform the more expensive segment of the market. So in the 3 months up to the end of October, we saw 3.9% dwelling price growth in the lowest 25% of property values, and only 1.8% dwelling price growth in the quarter for the top 25% of property values. Now, these are all dwellings, and as we highlight each month, it will actually be skewed because the volume of units and townhouses that sit in this data will fall into the more affordable market segment, and that section of the market is still outperforming the house market on a monthly and quarterly basis. So that's just important for people to get a snapshot view of what this data is made up of.
So Brisbane house values, again, we've seen that increase, 0.6% in November, bring the median house price to $974,396. So over the past year, house values have risen at 10.2%. Again, that supported that supply and demand side of things.
Yeah, definitely. And again, when we compare Brisbane's performance over the last 12 months against the likes of Melbourne, which went backward 2% compared to our 10.2% price gains, Sydney only yielded 3.3% capital gains over the 12-month period. So you can see just how different markets have performed. Adelaide experienced 12% growth, and Perth leading the nation in terms of capital city market growth at 18.6% growth over the last 12 months.
Unit values, and this is units have they seem to just be topping everyone all the time at the moment. Again, they've outperformed the houses. Value has risen 0.8% in November, 2.7% over the quarter, and the annual unit price growth reached 16.2%.
It's a really big difference when we look at the annual growth indicators for units and houses here in Brisbane, 16.2% in the unit market versus 10.2% in the house market. That's a huge difference in terms of capital growth performance. Brisbane, one of the most outstanding cities, again, for 12-month price growth in the unit market sector, well ahead with 16.2% growth than Melbourne, which experienced negative growth, negative 2.1% growth, Sydney 2.5% growth. And then we have Adelaide and Perth performing at a similar level. In Adelaide, 16.6% growth in the unit market, and Perth 22.2%. Now, it is interesting because a lot of people sort of have indicated that, buying a unit, for example, in Melbourne is a really bad idea. I think those people that have been invested in the unit market in Brisbane over the last 2 to 3 years have had exponential growth, well exceeding the growth in the housing market. And it is a function of local drivers of supply and demand. And I think that that's why you can't just assume that one property type or one property market is going to perform the same across all of the country. It does come down to local drivers of supply and demand for that product type in that particular market as to where prices are likely to go.
Now, I don't think we mentioned, but the median unit price now stands at $677,810.
Who would have thought, off the back of COVID, where we could buy units for, $200,000-$300,000 in some of the best parts of Brisbane, that the values would have increased so rapidly in such a short space of time. And who would have thought that we would have been lining up to, inspect some of these properties? And in the last month, I know our team, I've spent many hours inspecting units and townhouses where it is still so busy that you are bumping into other buyers as you're trying to record an inspection video for a client. And, it can be overwhelming for people when they experience that level of buyer demand, but there's definitely still that strong demand for good quality units in well-located areas of Brisbane.
And this year, the government made a change to the stamp duty concession side of it, where they've lifted it up to $700,000
for first home buyers. The threshold, correct.
There's not much change when you look at the median price at the moment, when it's $677,000.
Well, that's what shifts demand in a market, and political intervention like this can often, cause buyers to act in different ways. And of course, in this instance, it's shifted demand into that segment of the market below $700,000 where stamp duty concessions do exist for first home buyers. And yeah, they're the people that are turning up to a lot of those open homes. But I will say there's actually been a lot of investor activity in that market, driven by much higher yields, even though units obviously have expenses associated with body corporate fees as well. I think for those that have been in the market, they've experienced that strong capital growth uplift. They've experienced much stronger holding income, evidenced by stronger yields. And not only that, but the growth in rents over the last 2 years for units in Brisbane has actually outperformed houses as well. So that yield or that income uplift has actually been really strong in that unit market as well. Will that continue? Well, we've got an up and coming episode at the beginning of 2025 where we're going to make some predictions about what you can expect in the Brisbane market in the next 12 months.
We'll give away all the secrets. Brisbane rental market, as I mentioned earlier, vacancy rates fell from 1.1% in October to 1% in November. And rent growth, it decelerated a little bit, but it's still, increased annual growth now sitting at 3.6%.
Yeah, and I think when we look at the yields, we are seeing some compression there. So gross yields for houses across all of Greater Brisbane now are sitting at 3.4%. So that's dropped slightly month on month. And that's because house prices have continued to increase, but the rents in the house market haven't increased at the same rate. So we've seen the yield compress slightly. For units, gross yields remain unchanged month on month. It's currently 4.5%. And that's what I was talking about just a little earlier and why investors have been somewhat attracted to that affordable unit market in blue chip locations, because the yields are higher, even though the holding expenses may also be a little higher. The gross yield is higher, but potentially the net yield can also be a little higher depending on what those body corporate fees are as well. And if you are not understanding the lingo that I'm using, obviously when we talk about property investing, it's not just about capital growth, it's also about rental return, it's also about cash flow. And this is something that our team help our clients to understand, because when you're buying an investment property, you're usually buying for long-term wealth creation. A lot of people do buy for additional supplementary income now, and it's important that you're identifying the right asset that aligns with the objectives that you have as a property investor. And that's obviously what a team of qualified property investment advisors can assist you with.
Now, I know we do talk about seasonal times in the year as well. So just keep that in mind when we're going into December. Don't forget that it seasonally, it will probably quieten down a bit. Some people won't want to sell their properties. Agents will have a break. It's the only time of the year that agents actually do have a proper break, which is good for our industry in a way, because we get a little bit of a chance to have a break as well. But I think buyers, be prepared. I think when you come back in January, early next year, we've still got that high demand and low supply. So the supply and demand imbalance, I think it's underlying factors for the year going forward to be prepared for what's going to happen as well.
Look, I agree. I mean, there's absolutely no doubt as we close out 2024 that the fundamentals for Brisbane remain relatively unchanged. We're in a similar situation to where we were back at the beginning of the year. We haven't seen those interest rate hikes throughout 2024 that we saw throughout 2023. So people have become more comfortable with the cost to borrow. They've become more comfortable with their repayments. We certainly haven't seen forced selling that was predicted when interest rates were escalating very, very rapidly. I think that the solid fundamentals here in Brisbane also set Brisbane up for continued month-on-month price growth into 2024. The rate of that price growth, well, that's something that we will discuss in our episode in January, where we're going to be, putting forward what we think might happen in the 12 months ahead. But overall, I absolutely think Brisbane's market remains very well placed or well positioned for continued growth into the months ahead.
Well, market update. I think we've pretty much covered most things for November. Hopefully that's covered everything for everyone. Beautiful warm weather up here in Brizzy. We're still loving the heat. We do love it up this way. So if you have your holidays up this way, I hope you all enjoy them. Look, I'll let Melinda wrap it up as we normally do. Market update, last one for the year. The next one we will do will be December, but we'll be doing that one in January, obviously. So look, hopefully everyone's having a great holiday. Enjoy your break, enjoy your Christmas break with family, friends. From myself and Melinda, take care and bye for now.
Yes, I would like to take this opportunity to wish all of our loyal listeners a very Merry Christmas and a prosperous new year. We hope that this time with friends and family is special and you get to enjoy some downtime during the festive period. As always, if you have enjoyed this episode, we would love you to share with friends and family. Great time to do it across the Christmas period. If you enjoy our content, we would love for you also to leave us a review, because it does help others to find the information that we share. We wish you a very Merry Christmas. We look forward to speaking with you again after the Christmas period. Until then, bye for now.